This is Nightly Business Report with Bill Griffith and Sue Herrera.
Facebook's faceplant. The stock has its worst day in 4 years. After another privacy misstep, it led tech lower and it pulled the rest of the market down with it.
Here we go again. The government could be shut down in just days as lawmakers try to work through a number of thorny issues before Friday's deadline.
Falling out of love 10 years after the crash, a new report says fewer people are embracing stocks. Those stories and more tonight on Nightly Business Report for Monday, March 19th.
And we bid you good evening, everybody. Welcome. It was a rough start to the week on Wall Street today. All of the major indexes fell more than 1%, with the NASDAQ off the most. It was led lower by Facebook, which had its worst day since 2014, as you heard. That after the company said that a third-party firm improperly kept data on millions of its users. We'll have more on that story in a bit. The sell-off, though, in tech, which has been one of the hottest sectors in the past year, that led the broader market lower as well today, with the Dow closing down 335 points to 24,610. The NASDAQ was off by 137. The S&P fell by 39. Bob Pisani has more for us tonight from the New York Stock Exchange.
The big story today was Facebook down 7%. On the surface, it's easy to blame today's market woes just on Facebook. It's a big name, big valuation, a lot of momentum behind it. And when it reverses like it did today, it gives a lot of investors, particularly momentum investors, pause. But the story's bigger than Facebook. Social media in general has been under assault for over a year. Many now realize that services that companies like Facebook and Google or Snap claim they provide to them for free, in fact, comes with a heavy cost: privacy. And the customers are now coming to understand that in many cases, they're not customers, they're the product. But there's bigger problems for the market. There's a big leadership vacuum right now. No group is stepping forward as tech stocks have dropped. Stocks started the year strong on the strength of leadership among the biggest sectors like technology and financials and consumer discretionary. But tech is now rolling over amid an assault on social media, and nothing is stepping forward. Energy stocks never recovered from the big drops in early February. Materials and steel stocks have been dropping after rallying briefly. Industrials are faltering on these trade war issues. And banks were the last leadership group to go. They too have been trending down in the last few days. So there's considerable nervousness around the Fed meeting with talk of a fourth Fed rate hike. Trade wars are weighing on stocks. And the White House drama also is a distraction. The issue, what's left to power the markets forward? For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
More now on Facebook, which shed more than $35 billion in market value today. And as Bob just mentioned, the stock dropped about 7% in a very rough day of trading. Julia Borston explains what exactly happened at the company and why investors fled the stock.
Facebook under fire. Lawmakers in the U.S. and U.K. calling for CEO Mark Zuckerberg to testify, and the EU announcing an investigation into violations of privacy laws. Here's what happened. In early 2014, an app developer accessed info from 270,000 users of its app, as well as the data from about 50 million of their friends. Until April 2014, Facebook allowed app developers to access that data. The developer illegally sold that data to Cambridge Analytica, a data firm that worked with the Trump campaign. When Facebook found out in 2015, the data firm told Facebook it deleted all of it. This weekend's reports say the data is still out there and note that Facebook failed to alert consumers whose data was harvested.
I think Facebook got blindsided and they weren't quick enough to acknowledge it, that their data was hacked and their data was misused. I think they need to be more upfront about that, but there's no question these are very difficult IT challenges for Facebook.
Facebook says it's investigating the accuracy of the claims and just hired an outside firm to do a comprehensive audit. And Cambridge Analytica denies wrongdoing, saying it cooperated fully with Facebook to delete the data after it discovered that the app developer it was working with had broken the rules. Facebook's business is built on its more than 2 billion monthly active users having confidence in the platform, and consumer reaction is mixed.
I figure everyone has my data, like it's all out there, so I'm not so concerned.
I believe these executives should be held accountable.
I still trust that
Facebook and other companies are trying their best to do it the right way.
Users' trust is key to provide valuable data to advertisers to target them.
They know at the end of the day, having the trust of their consumer is paramount, it's key. And if they don't earn that trust every single day, you will see users go off the platform. So I think look for them to try to self-regulate as much as possible as they go forward here.
Now analysts are raising concerns about potential advertiser backlash. Wells Fargo warning that this creates a serious public relations black eye and could lead to additional regulatory scrutiny. For Nightly Business Report, I'm Julia Borston in Los Angeles.
So, could the allegations facing Facebook cause a wave of regulation to crash in on big tech? And if so, what would that mean for the whole technology sector? Joining us tonight to talk about it is Ed Lee, managing editor at Recode. Ed, already tonight we've heard that the Connecticut Attorney General is talking about a new investigation there into these allegations. So the drumbeat is already starting to sound. What should Facebook do in terms of self-regulation, in your view?
So it's a great question. I think that sort of hits it on the head in terms of Facebook's dilemma right now. There's a lot of political will getting into this in terms of, should Facebook be regulated? It's going to be a test of Mark Zuckerberg's leadership, the CEO. They haven't taken definitive action as of yet, right? They're basically saying, we still need to investigate this, make sure that, the reported claims are actually true, that this data is still on these third-party servers. But even after that, there needs to be a more systemic fix in place in order to prove to Congress and to the American public that, we're going to keep people's data safe. Right now, they're just taking these small steps, these incremental steps.
But as Bill mentioned, the risk of regulation is higher now than it probably has ever been before for this company. If indeed regulation is imposed, what do you think that would look like? Would it be more like European standards, which are stricter privacy codes?
So I think Europe is actually a good model in terms of where the U.S. could look in terms of this is what Europe does in terms of how they restrict data, how they protect people's privacy. The U.S. typically sort of gives much more leeway, partly because these are U.S. companies we're talking about. They want to make sure that they have certain advantages or maintain a certain advantage. I think if they really, really go full bore, they'll want to restrict how Facebook actually uses its data. In other words, how they sell the data to advertisers, which is, advertising is the lifeblood of Facebook and Google and Snap, these other social media companies. So that's the hardest they could hit them. Chances are it might be more of like a warning label type thing. When people sort of sign up for things, there might be a label that comes up, says your data could be used without you knowing it, kind of a disclaimer. That would be sort of at the other end.
And if the fears are valid that if there are regulatory restraints put on Facebook, the rest of the industry should be worried about that at the same time. Do you think Twitter is not far behind, or other social media platforms, or other technology companies?
I think if Congress does craft some kind of regulatory framework for how this is used, it's not going to be just Facebook specific. I think partly also to be fair, but also to make it level playing field. So yes, if it affects Facebook, it's going to affect Twitter, it's going to affect Google, it's going to affect Snapchat, basically all of online advertising. And I think that's the framework. Those are the stakes. They're really, really high. In order for it to be fair, it wouldn't have to single out one specific player. It should be across the board.
Ed Lee with Recode. Always good to see you. Thanks,
Sure.
Ed.
To Asia now, and specifically China, which has a new central banker. Economists say the choice signals Beijing's focus on economic reforms and the need to get its debt under control. Eunice Yoon has the details from Beijing.
China has a new central bank chief. His name is Yi Gang, and he is no stranger to the United States. He studied in Minnesota, he got his PhD at the University of Illinois, and tenure at Indiana University. Now, up till now, he was a deputy governor at the People's Bank of China and a protege of the outgoing governor. The outgoing governor is known as a pro-markets voice among Chinese policymakers and favors faster liberalization. Now, for foreign investors, there are two things that people want to know. First, is Yi Gang going to be an advocate for opening up the financial markets? In his first comments as governor, Yi said a slew of new reform and opening policies would be announced from now until early April, though he didn't mention anything specific. Now, the second question for investors is, what is Yi going to do with all the debt? Debt here has been rising, and the outgoing governor has expressed his concern about it. Yi didn't say anything about that today. Now, it's unclear how much influence E will have over policymaking. Here in China, unlike the Federal Reserve or the ECB, the PBOC doesn't have full independence from the government or the Communist Party. And the man who appears to be calling the shots on the economy is President Xi Jinping's close ally, Liu He. Liu is now vice premier and presents himself as a market reformer, though so far under his guidance, we haven't seen much financial liberalization. Xi's team on the economy has been focused in recent months on reining in credit and clamping down on shadow banking. But the question is as the economy continues to slow down, will this team decide that they're going to stay the course, or will they reverse policy and start to pump up credit in order to keep up the growth? For Nightly Business Report, I'm Eunice Yoon in Beijing.
Time to take a look at some of today's upgrades and downgrades now. Goldman Sachs is reaffirming its sell rating on Tesla. The analyst there expects Model 3 deliveries to come in below expectations. The firm, though, is maintaining its 205 six-month price target on that stock. The stock fell, though, 2% to 313.56. Meanwhile, coverage of Fitbit was started with a buy rating at Craig-Hallum. The firm calls the stock price compelling, says all of the pieces are in place now for a successful change to Fitbit's strategy. Price target, $10. Shares rose 2% today to $5.37.
Grubhub saw its rating cut to hold from buy over at Stifel. The analyst there is concerned about the stock's valuation, which has risen about 50% so far this year. The price target is $110. That's just above where it closed today, which was $108.82. Dr. Pepper Snapple's rating was raised to outperform from sector perform at RBC Capital Markets. The analyst there noted potential improvements to its coffee business following its merger agreement with Keurig. The price target is $135, and the stock rose fractionally today to $118.36.
Still ahead, why some Americans still shun the stock market even after one of the strongest bull runs we've seen in history. President Trump was in New Hampshire today, where he outlined steps to combat the opioid crisis. In fact, he said he is considering suing some drug makers for the role they've played in fueling the epidemic.
Our Department of Justice is looking very seriously into bringing major litigation against some of these drug companies. We'll bring it at a federal level. Some states are already bringing it, but we're thinking about bringing it at a very high federal level.
In fact, those comments sent shares of 3 opioid producers lower, namely Mallinckrodt, Endo, and Depomed.
The national debt has topped $21 trillion for the first time ever. That milestone comes shortly after the suspension of the federal debt limit last month. That allows the government to borrow an unlimited amount of money. Economists expect wider budget deficits over the near term due to the tax cuts that were signed into law late last year.
Congress has only a few days now to finish up the details on a spending bill that was broadly agreed to just 3 weeks ago. And if they don't come to an agreement, the government faces yet another shutdown. Yolande Mui is covering that story for us from Capitol Hill. So what are the sticking points at this point, Yolande?
Yeah, Bill, Republicans have been meeting to discuss the final details of this $1.3 trillion spending package just this evening. As you mentioned, they've already agreed to the top line spending numbers, but there are all these side agreements that usually get attached to these types of bills that they are still hashing out. One of them is stabilizing health insurance marketplaces. That is one that we're hearing is being negotiated up until the last minute. Also, funding for a border wall and a pathway to citizenship for undocumented immigrants who are brought to the U.S. as children. The last we heard is that that will not be in the omnibus spending bill, as it's called. But again, those final details still to be released. Also still up for debate is funding for the Gateway project that includes a tunnel between New York and New Jersey. That's been a priority for Senate Democratic leader Chuck Schumer, but it's something that the White House has been adamantly against. So lawmakers really see this as their last chance to get a piece of the pie in what could be the final must-pass legislation for Congress this year.
Okay. If that wasn't enough, what else is on the congressional agenda?
Well, once they get through the spending bill, it should clear the decks for the next 2 years. You're expecting to see Congress really focus on those midterm elections, but what also could be coming up is tax reform phase 2. We spoke to the head of the House Freedom Caucus, Representative Mark Meadows, who said he believes we could see a rollout as soon as April 15th. So mark your calendars, guys.
Wow. Tax legislation that close to an election. That should be interesting. Ilan Mui in Washington, thank you.
Oracle's revenue comes up short, and that's where we begin tonight's market focus. After the bell, the cloud computing company topped profit expectations, but saw its sales slightly miss targets. The company's software licensing revenue rose, but that too wasn't good enough for the street. The shares initially fell in the extended session. They ended the regular day down a fraction to $51.95. Shares of the smartphone technology maker Universal Display were pressured following a report that Apple is investing in next-generation technology to make its own phone screens. Bloomberg says Apple has secretly been working on developing micro-LED screens, a feature that could make devices slimmer but also improve battery life. A finished product is said to be a few years away. But shares of Universal Display fell 12% today to 109 even. Newell Brands will give billionaire Carl Icahn 5 board seats in exchange for support in fending off activist hedge fund Starboard Value, which has been pushing for a management shakeup at the consumer products company. Last week, Icahn revealed a nearly 7% stake in the maker of Sharpies. As part of his deal with Icahn, Newell will consider selling some of its non-core assets. Shares of Newell Brands were off 6% to $26.79.
Biotech firm Heron Therapeutics says that it is experimental anesthetic intended for patients undergoing specific surgeries significantly decreased pain when compared to existing treatments. The company also said that patients who were given the new anesthetic needed fewer opioids in the hours following the procedure. That's certainly good news. Shares jumped nearly 27% on that news to $27.30. And chip equipment maker KLA-Tencor is buying technology company Orbotech for about $3.5 billion. KLA said that the deal will grow its customer base and create new revenue-generating opportunities. Separately, KLA launched a $2 billion share buyback program. KLA-Tencor shares fell more than 3% today to $115.98. Meanwhile, as might be expected, shares of Orbotech popped by 6% to $63.99. And McDonald's reportedly is going to settle a lawsuit charging the fast food giant with alleged labor law violations at its franchises. A union group representing McDonald's employees had previously claimed that workers were fired after participating in protests seeking a higher minimum wage. Shares of McDonald's fell 2% today to $159.01.
Well, it's been a decade since the start of the financial crisis that wiped out trillions of dollars worth of assets held by U.S. households. Since the crisis, though, a bull market has emerged and stocks have enjoyed quite significant gains. But despite the run-up in stocks, a Reuters report says many Americans are staying on the sidelines, investing about $900 billion less than they did in 2007. Joining us to talk about that is Stephen Wood. He's the chief market strategist at Russell Investments. It's always good to have you here, Stephen.
Thank
Welcome.
You. Welcome back.
So
Thanks.
What do you think is behind this? First of all, what do you think about that report and the statistics, and why do you think it is?
Well, I think there are certain generational impacts. If we look at our grandparents, how the Depression affected them, our parents, how they react to inflation given their experience in the 60s and 70s, that global financial crisis was a serious blow to a lot of investors. So I think there's some aspect of that even a decade later. And again, it could be generational. I think there's also an aspect where, unfortunately, the average retail investor typically waits to buy at the top and sell at the bottom. And that's something that we work very hardly with our strategies is to minimize, but that is unfortunately a common characteristic of investment patterns.
There are probably plenty of people who feel like they've missed the boat this time around, so they're going to wait for a significant pullback before they want to get into the market, right?
Well, that would be people that are paying attention to the market specifically, yes. and that may not be everyone.
Well, let me ask you this. Where are they putting the money if they're not putting it in the stock market right now?
I think right now you're seeing cash buildups right now, and I think a lot of people are probably just sitting on the sidelines. As you mentioned, they're waiting for maybe a higher rally in the market to confirm. So there's a lot of this behavioral finance, the psychology of investment that's really impactful, and I think that's why you need a very good global disciplined strategy to minimize some of those behavioral biases.
Perfect segue into where to put your money to work. And you do like a global strategy. You like Europe. Japan, emerging markets?
We do. As I was sharing with you earlier that I've been in Portugal, Spain. I just got back from Japan, so the time zone I'm in, I don't know.
You're not sure.
I'm not sure. But assuming we're in New York right now, the message is similar in Japan, it's similar in Europe, and it's similar here. That if you look at the cycle right now in the U.S., the economy looks okay. Our earnings are going to look pretty good, but it's a very expensive market. So for an American or U.S. dollar-based investor, this is a pretty good time to start thinking about rebalancing globally. Just being disciplined, blocking and tackling, looking at Europe, which is cheaper. They've got an earlier economic cycle. And whereas our central bank is raising rates, they're still accommodative, similar to Japan. So 10 years ago, the U.S. was lagging. Right now, the U.S. is leading. So rebalance globally and be disciplined, which, again, it minimizes some of those behavioral mistakes.
But we'll see if the millennials who were damaged by the financial crisis of 10 years ago decide they want to get into the market, right?
Well, the benefit for them is they're young and they're going to live a lot longer than we will. So they've got time.
We can only hope. Stephen Wood of Russell Investments. Always good to see you. Thanks.
Thank you, sir.
Coming up, retail's extreme makeover.
I'm Courtney Reagan in Las Vegas, Nevada, at one of retail's biggest conferences of the year, where established brands, tech companies, and startups are all coming together to figure out what the future of retail will look like. I've got the story coming up on Nightly Business Report.
Here's what to watch on Tuesday. Jerome Powell will chair his first Monetary Policy Committee meeting. The two-day meeting begins tomorrow, concludes with a press conference on Wednesday. FedEx reports earnings that include results from its peak holiday season. That should be interesting. And the Saudi Crown Prince will be visiting the White House to discuss economic priorities between our two countries. And that is what to watch on a very busy Tuesday tomorrow.
Indeed. Uber has temporarily suspended its self-driving car tests in all locations after a deadly accident in Arizona. A woman was reportedly hit and killed by a vehicle in self-driving mode as she crossed the street. That incident appears to be the first time that someone has been killed by an autonomous vehicle. Uber says it's cooperating with the investigation.
The nation's largest retailers are asking the White House not to levy new tariffs on China. A letter signed today by 40 different retailers, including Walmart, Target, and Costco, argued that tariffs would lead to higher prices, which in turn would hurt working families who shop in their stores. There are reports you may have heard that the White House is considering tariffs on at least $30 billion worth of imports from China beyond steel and aluminum.
Teen jewelry chain Claire's is filing for bankruptcy. The retailer, which says it has pierced more than 100 million ears worldwide, never heard of that statistic, but that's what they say, is struggling with a heavy debt burden. Now, the company operates in 99% of America's malls and was purchased by the private equity firm Apollo Global Management for more than $3 billion back in 2007.
That's over 40 years, by the way.
Yeah.
As the retail industry does change, many companies are looking to technology to give them an edge. Courtney Reagan reports now from a major retail conference in Las Vegas.
Here at Shop Talk, everybody is talking about the future of retail and which companies will lead the way. There seems to be no doubt that technology will play a critical role. Startups are announcing deals with established retailers, and tech companies are pitching ideas to make shopping better in-store and online. Walmart and Handy are going to offer shoppers TV installation and furniture assembly services in 2,000 stores. By the end of the year, shoppers in Macy's stores can scan and check out on their phones. CEO Jeff Gannett says mobile checkout saves 90% of the time it takes to go to a cashier, even though a store employee still has to remove security tags and verify the purchase. Macy's is partnering with tech company Marksent to roll out a new virtual reality program so shoppers can lay out Macy's furniture in their living room to see how it will look before they buy.
It's increasing what they buy in that purchase, and it's decreasing the amount that they return because they've already kind of tested it. They already kind of feel that the shape and the size is going to work in their home environment. You don't have to have a physical sample in the store, and that's why the furniture space can be half of what they are today to do the same level of volume.
But infusing stores with technology will only be a winning strategy if it brings shoppers in. Mall operator Westfield co-CEO Steve Lowy thinks physical retailers are massively behind when it comes to understanding their consumers. As chairman of One Market, it's a retail technology startup, he's working to change that.
The retailing industry really needs to focus on servicing its consumer much better than it is. It's currently really boxing with a hand behind its back right now because they're really only working with their own data. They don't really have the ability to share data across a network so they can better understand their consumer. They have no idea what the consumer is doing before they actually make a purchase.
No one is sure what the future of retail will look like, but there's a groundswell of innovative companies here determined to figure it out. For Nightly Business Report, I'm Courtney Reagan in Las Vegas, Nevada.
Little Caesars made a March Madness bet, and now it owes everyone a free lunch. The pizza chain said that if a bottom-seeded team beat a #1 seed on Friday night, everyone in the country would get a free meal. Now, that seemed like a pretty safe bet, but that's not how it turned out when number 16, University of Maryland, Baltimore County, defeated #1, University of Virginia. So, your free lunch? It's April 2nd.
Meantime, Black Panther has marked yet another box office milestone. The movie topped the domestic box office for the 5th straight week, making it only the 3rd film in the past 20 years to do that. The Disney film took in another $27 million over the weekend in ticket sales, pushing its domestic gross to more than $605 million.
And here's another look at the sell-off on Wall Street today. The Dow was down 335 points, NASDAQ off 137, S&P 500 fell 39. And that's it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great Monday evening, everybody. See you tomorrow.